Hey, what's up everyone? JT here. Welcome to Path of Money, where I talk about stock, market news, and investing for the long-term portfolio. So today, it is November 10th, and I like to say it looks like the market just closed about 20 minutes ago. And I like to say that mostly the general looks like the market has been trading sideways and not really much movement today. But yesterday we had big news. Yesterday, Pfizer announced that they had pretty much vaccine and test trial of stage 3 that were 90% effective. And in general, I think the FDA was looking for about 50%, but while I'm sure you've noticed the markets have jumped up from this big news. And I like to say in general that usually whenever markets react, every reaction is kind of an overreaction, and honestly, this doesn't change anything from that. So the stock market in general, I would like to say, is always future looking, and while the future actually look much brighter now with this vaccine news. Now, it's kind of been a day after since the news came out, and a lot of stocks reacted positively, and some, of course, reacted negatively. And I think many investors in general had a day to kind of digest the news and just react to what happened. So, what stocks am I looking at right now since the news came out? So in this video, I'm going to look at my top 5 stocks that have caught my eye and why I'm thinking to add a significant position to my portfolio. But before I do get there, if you do find anything interesting in this video, please don't forget to hit the like button down below and subscribe for more content. I would super appreciate that. And also let me know down in the comments if you're keeping an eye on any certain stocks in particular. Alright, so let's get started. The first stock, and definitely one of my most curious stocks I'm looking at, is Amazon. So first, Amazon had hit high around 3,300 back in November 5th, November 6th. As you can see right here, 3,300, so pretty high, I would like to say. But recently, of course, when the vaccine news came out this past Monday, which is yesterday, Amazon dropped like a rock, as you can see right here. Very fast drop. Yesterday, they did drop around 8%, and in today, they did drop around another 3%. And you can see that they did close around 3.4% down for the day. So currently, Amazon is trading around 30.30 or around 30.50, which I would say is actually not a bad price for my opinion. But of course, I would say under 3,000 is a better buy. Now, I would say the biggest reason that Amazon dropped is obviously e-commerce. So there's a big assumption that once the economy gets back to normal, that people will start to go back and shop physically, like just go out and buy things actually again. Now, I think this is actually pretty much where an overreaction is an overreaction in the market, especially for a stock like Amazon. First, we don't know when vaccines will be made public since they've only just announced their stage 3 trials, which in my opinion, I think will probably happen in the middle of 2021. So still a couple months out. And second, Amazon is Amazon, and let's get real, consumers will probably still continue to shop online and probably in bulk. And while yes, it is true that consumers will probably go back to shopping physically because this is something that you cannot replace by going into the store, but I don't think this will actually affect Amazon in the long run, especially when Amazon being so integrated in consumers' lives and their ventures in general have been so outside of e-commerce. Amazon's been labeled pretty much an empire by itself. So Amazon's a giant, and honestly, I don't think it's going anywhere. The second stock is Square. Now, Square is one of the newer financial services and merchant services, and this is another growth stock that a lot of investors have been pouring money into, especially when their recent reported amazing earnings came out for quarter 3 2020. And as we kind of take a look right here, you can see that quarter 3 earnings came out and it looks like they did beat EPS by 0.18 per share, and as well as surprise earnings revenue by almost $1 billion, $954 million. That's a big increase and revenue surprise that a lot of investors did not see. So on that date, as you can kind of tell, that came out on Friday. They did jump up all the way to around $199, almost practically $200 per share, which is insane. So right now they are currently trading for $170 per share. So a big drop from then. And of course, they've been impacted from recent news from the vaccine news. And of course, why did it drop so much on Monday? Well, I would like to say in general that they are a growth stock who also deals with e-commerce merchants as well, and major investors are trying to take profits and move on to the next big thing, which I would say is more travel stocks and hospitality stocks in general. Now, I think especially when the economy starts back to normalcy, that more small businesses will probably get their customers back for restaurants and shopping, etc., etc. And because Square deals with physical merchants as well as online merchants, either way, I think Square is a terrific buy, especially getting hit with this sale price of $170 from the recent highs of $200. So in general, I don't think Square will be too much affected in the long term. The third stock is Facebook. Now, Facebook is a social media giant by itself, and I would say it's one of the biggest leading companies within the social media industry in general, with their platforms of Facebook, Instagram, WhatsApp, and Facebook Messenger, of course. And I think whenever Facebook gets a chance to go on a sale, they are a pretty good buy. Right now, they are trading for around $270 per share. Previously, they were at around $290, almost $300. And of course, yesterday, they did drop from the news from the vaccine. So today, they have dropped around as a low of 4.5% down, but they did close around 2.27, which isn't too bad. And I would say that personally, this isn't my best recommended price of entry. I think anything below 250 is probably a better buy in my personal opinion. But I think in general, Facebook is a good play for the long term. And I think in general, everyone will probably still keep using social media platforms in general, and companies will still start to pay for actually more ads, since in general, consumers will probably want to buy more things since they're actually able to go outside physically and see other people and not have to worry about their illness. So in general, I think Facebook is a great company to pick up for the long term, and also being industry leading doesn't hurt it as well. The fourth stock is the big mouse company, Walt Disney. And Disney definitely had a huge pop around 50% yesterday once the vaccine news did come out. 15% for Disney is a big jump, I would say. And for good reason, Disney has their hands in parks, cruises, movies, and a lot of other things that are physically giving entertainment for other people and families. Now Disney is trading around $140, which is actually just shy of their $150 from their pre-illness highs. Let's get right there and kind of see. Yeah, as you can see right here, around a 150 high before of said illness right here, as you can see. And since then, it does seem like it's been pricing into practically pre-illness situations. But Disney is on the list because they are a double threat, in my opinion. They are maturing their streaming service, Disney Plus, which makes a considerable amount of their revenue now under lockdown. Streaming is right now currently under the direct-to-consumer portion of Disney's revenue. And if Disney does start to reopen their parks again, I would say that Disney would make a big previous high. So previously, before the illness, parks made a pretty decent size of Disney's revenue. In 2019, quarter two, I would say that about 41% of Disney's revenue was actually from parks itself, which is kind of crazy and enormous to think about. And I would think that once everything returns back to normal, Disney would have their parks on top of their newly created streaming service, Disney Plus. So in my opinion, I think Disney looks very interesting to pick up right now. There are pricing in a lot of things right now, but whenever they do start to dip again, I would pick up shares with no question. And my fifth stock that I'm looking at is ticker symbol SBE, known as Switchback Energy, but better known as Chargepoint. And for those who don't know, Chargepoint announced a reverse merger with SBE recently. Their first announcement was actually back in early September, but they only recently announced that the specific date that the reverse merger happened would be on December 15th, December 16th, which is actually next month, so pretty soon. And while Chargepoint isn't really affected directly by the vaccine news, I would say that if more people do go out, probably more people will use chargers, which means more people use Chargepoint public chargers. However, I do want to point out, since Chargepoint is affected by recent news from the specific elections. And of course, election results did come out this past weekend. So for people who don't know what Chargepoint is a public charger service that charges EVs in many different locations. And they have locations all across the world. And I bring news from the election since a Biden administration does announce that they will bring more EV support. As you can see right here, Joe Biden has proposed reforming and extending the EV tax credit, as well as building a vast EV charging network, which also means Chargepoint is one of them. This Chargepoint is a very big charging network all across the world. And I would say that in terms of government support, they'll probably get some government funding, which means that Chargepoint will probably build more chargers and help out and support the infrastructure for EVs towards the future. And I would say in general that right now it looks like from when Chargepoint announced their merger with SBE, they are currently valued at a valuation of $2.4 $2.4 billion in market cap, which is actually only the start of what Chargepoint can actually bring to the table. And it is expected that Chargepoint to actually be much more profitable and bring in higher revenue as years to come, especially more EVs come on the road. But I would say in general right now for SB and Chargepoint in general that this stock is currently pretty volatile, and just a word of caution before you actually start investing into the stock, because right now before the merger date, a lot of traders are probably trying to get in and out and just make profits and skim out the top. However, in my opinion, I do see Chargepoint being a very, very considerable company, especially for the future of EVs. And so that kind of wraps up my top 5, but I would say in general that there seems to be a big obvious rotation in the markets right now from tech stocks, growth stocks, back into value stocks such as hospitality stocks and travel stocks, since of course good news from the vaccine came out. And you probably notice a small pattern in the stocks that I've chosen. Most of them are growth stocks that have been hit from this news, or maybe positive news in different respects, but it's more of a small sell in my personal opinion that no doubtly these stocks will return back to the normal highs. So the TLDR is pretty much I chose Amazon, Square, Facebook, Disney, and Chargepoint as potential stocks I'm looking towards the future to pick up shares. So alright, this kind of wraps up my video on my top 5 stocks I'm looking at. If you found anything interesting in this video, please don't forget to hit that like button down below, and let me know down in the comments what stocks you're looking at as well. Thank you so much for watching. Peace.